Shall I begin, Adi?
Yes, Chris, you have the floor.
Okay, first of all, a warm good afternoon from everyone in Manila and a good morning for everybody in the UK. First of all, I'm Chris Nelson, as head executive director for the British Chamber, representing over 300 members. And obviously, we're very pleased to have this webinar. First of all, I'd like to thank our partners here. First of all, of course, Manchester Chamber, and I'll be handing over to Susanna shortly, who's been a great partner for the British Chamber of the Philippines in the UK. And we also have a local representative in Manchester called Roger Lamb. And Manchester Chamber will be happy to work, and obviously we're happy for companies, and also we'd like to welcome all the international trade advisors who are on this call. And to show you how active the Philippines is, I'd also like to thank everybody from the FinTech Association. I think we have their board here. I have an old friend, Amor, here as well. I would like to say thanks to everybody. And I'm thinking you're going to see some very interesting presentations. I'd also like to say that we have registered today members of the Department of International Trade from the British Embassy in the Philippines. Our close contact there is Richard Colley. I think today registered is Emma Lester and her colleagues. Just to let you know that the British Chamber works closely with the UK to promote trade and investment opportunities. And of course, while all economies are challenged at the moment due to this various crisis, I would like to say and emphasize how well the Philippines has grown over the previous years at a rate of about 6%. And what we're seeing, of course, particularly with this current crisis and move into e-commerce, and in particular, this will accelerate further opportunities in the FinTech space, which I'm sure will be adequately addressed by the excellent presenters today. So the British Chamber is happy to take all inquiries. I'd like to thank again our partners, Manchester Chamber, the FinTech, and also, of course, the close association we have, the British Embassy and the Department of International Trade. Anytime you have an opportunity, please contact us. We'll give you all the details. Without further ado, and once again, a warm welcome to everybody. Let's have an excellent webinar with Q&A. I'd like to kindly hand over to Susanna, who representing here the Manchester Chamber, who's been our great partner, and we look forward to further cooperation. Thank you, Susanna.
Thank you, Chris. I'm just gonna now share my screen. If it's showing, I hope so. Yeah. So good morning for those that are based here in Manchester, and good afternoon for those in Philippines. And thank you so much for the British Philippines Chamber to invite us to be part of this webinar. For us, it's very exciting because Manchester has become is one of his most important up-and-coming sectors is FinTech. So this is actually our very first event focused on this. Just to give you a bit of overview, Manchester is the largest business, financial, and professional center outside London, employing over 220,000 employees. And it's because of that obviously FinTech has become a natural fit for the region. All those strengths lay on payments, software, platforms, data analytics, and cybersecurity. So, and that's just to give you a very quick brief of Manchester. We are obviously in the Northwest region, and we work very closely with the British Chambers here and overseas. And just for those who are not aware of who we are the largest accredited Chamber of Commerce in the UK out of 53. We have nearly 4,500 members. That's across all sizes and sectors, and employing about 460,000 employees. We cover 10 local authority areas, but we do have members across the UK and internationally. And our top 3 sectors include business and financial services, property and construction, and manufacturing and engineering. As any chamber, I'm not going to go into the detail of these slides, just to give you a very quick, fresh view. We do a lot of policy and lobbying, so working very closely to ensure that our businesses can thrive both domestically and in international markets. And we provide a wide range of business support services. as those shown in the slides. I just wanted to bring your attention to the fact that we do have a dedicated COVID-19 section in our website, and we're working with Chamber, our patrons, strategic partners, and more to continue to provide support through these challenging times. We also launched a business monitor, which is a weekly economic tracker that allows us to understand the impact of the pandemic into the GM businesses. And we also launched a GM business community, which is free for all non-members, whether in the UK or overseas, that want to keep in touch with other businesses in the region. And in terms of international trade services, as Chris mentioned it, we do work very closely with a wide range of bilateral chambers here in the UK and overseas. We work with both UK and overseas companies, helping them whether they are looking to export, import, or invest. We engage with about 2,500 companies every year through our marketing channels and the service offer that we have. We are the largest service provider of export documentation services in the North. And we work with about 42 partners covering 93 countries and including obviously the Philippines with the biggest. We offer support in every stage of the internationalization process. And as you see here, and these are just some of our upcoming events and webinars. So happy for you to, for these slides to be shared after the presentation if you're interested in attending any of those. Thank you again for the invite to be part of the webinar today, and I'll hand it over to the British Philippine Chamber. Thank you.
Thanks for that, Susanna. Now to introduce our first speaker. Our first speaker is a global award-winning brand architect, crisis strategist, and marketing and communications innovator. At 24, she founded Geyser Maklang, which went on to become one of the top PR firms in the country. She helps companies navigate through reputational and information gaps in nascent technologies and is the leading communications, marketing, and PR forerunner in digital transformation, blockchain, cryptocurrency, and other emerging technologies. Amor currently serves as the Executive Director for the FinTech Philippines Association. Without further ado, Ms. Amor can start her presentation.
Yes, thank you very much. Thank you, Susanna, and very happy to see a good friend, Chris Nelson, leading the charge of the British Chamber. In behalf of the board of FinTech Philippines Association, which is currently the largest FinTech association in the country in terms of membership, we'd like to welcome everyone and explore ways by which we could work together, not just for FinTech, but for other things. Chino, you're maneuvering the slides for us. Can we go to the next slide, please? Now, this is going to be more of a conversation rather than a presentation. In the past 48 months, the Philippines has been the recipient of a technological and a FinTech diaspora from all over the world. We have some of the best and the brightest talents from all over the world choosing to domicile themselves in the Philippines. Now we have some regional brands such as Collectious, Coins.ph, which are primarily HQ'd in the Philippines, but has gone on to serve the rest of the region. I have to caveat that my presentation is primarily pre-COVID and hasn't really been updated to reflect the what we feel has been an accelerated change in technological uptake and behavior in the Philippines due to COVID. So bear with me on some of the slides. And by pre-COVID, I just mean as fresh as February of 2020 this year. One of the things we're particularly proud of is the extremely supportive regulatory environment here in the Philippines that has really served as a fertile ground for FinTech startups and for startups in general, looking to bridge this chronic problem of financial inclusion. Now, prior to COVID-19, 4 of our main pillars in FinTech Philippines Association has been digital payments, consumer lending, SME finance, and remittances. However, and this is perhaps something that we could explore more closely with the British Chamber, our mandate is not solely tied to FinTech. FinTech for us is more of an undercurrent, something that underpins all industries. So which is why you'll see that a lot of the initiatives and projects that we've had have been how to tech up via payments many of the traditional industries in the Philippines. As late as Feb 2020 of this year, we mounted our biggest ever mixer. I know mixer seems to be a misnomer. We had close to 350 attendees. So that's almost like a conference, and it was tied to InsurTech. So it's one of the other industries that we're hoping to tech up with regards to payments. Now, aside from the very friendly regulatory environment servicing the local FinTech businesses, the Office of the President and our organization was also part of the group that launched the Cagayan Economic Zone Authority last August of 2018 in Tokyo, Japan. And this is intended, right? Their aspiration is to be the Zug of and the crypto valley of Asia. And that's something that they're hoping to restart once the COVID pandemic has somehow settled. Now, next slide, please. Now, one of the things, though, that you'd have to understand about the Philippines, as evinced by the fact that it's still primarily a very cashless society, there has been a very low trust environment. So that's the dichotomy that you need to understand about the Philippines, right? So we have a very supportive regulatory environment. We're one of the biggest markets in Southeast Asia, only second to Indonesia, thus making us a preferred hub for fintechs. But the population has a very low trust environment. How do I mean by this? For example, next slide. And this is primarily pre-COVID, right? There is a very low uptake for cards and even digital wallets. Still, that of course may have changed, right, over the past 2 months. You know, we were saying, Chris, COVID has done more, right? Quite sadly, for the teching up and the digital transformation of many businesses than any board or any CEO has ever undertaken. So going back to the Philippines, 4 of the top e-commerce sites in the country are actually foreign. Lazada, Shopee, etc., Amazon even, which tells you that while there is a high propensity for uptake in the market, we need to navigate through a rather low trust environment. Now, it's not just in e-commerce or in the uptake of wallets. Next slide. One of the things, one of the things I'm particularly interested to explore with the British Embassy and also with the British Chamber is the opportunity to use technology to bridge certain markets in the country that continue to be underserved. And by this, I mean particularly the Islamic finance opportunity. So we have here our past chairman and who continues to, one of the co-founders and who continues to serve as a special advisor to the board and to the executive director, Mr. Jovi Tapiador, who will be speaking in a bit. We visited, was it a year ago or so, Jove?
Yeah,
the Bangsamoro area, right? The
a year ago.
Bangsamoro area. I'm a big fan of Jove's work because for me, he really represents technology championing good. And just imagine this. You know how the Islamic finance community has a problem with intermingling their funds with the rest of us because primarily our money is quote unquote haram. But it is only through nascent technologies like, say, for example, blockchain, that we have the opportunity to actually coexist without commingling funds. I'm also proud to say, Chris and Susanna, that a lot of my work in the halal financing space has actually been brought about by the introduction of the British Chamber and also the British Embassy in the Philippines. There's so much opportunity there. Now, a little bit, next slide, please. FinTech Philippines Association, it's all about networks and partnerships. We find the idea of competition to be very last century. It's all about us finding ways to work together and to connect the ecosystem, not just of payments, but for digital transformation. Just to give you a nutshell of some of the projects that we've done. Next slide, please. As of last year, I make it sound like it's such a long time ago, but as of last year, there have been certain industries that we have been focusing to tech up, and for which we have active committee chairmen, and also at the same time we've rolled out certain projects that we hope to be able to collaborate with our partners in both Manchester and also the British Chamber of the Philippines. We did a first ever real estate hackathon last August, September of last year. Before COVID, like I said, we mounted a major InsurTech event, one of the most inclusive at 300 attendees. The committee is looking at doing still this year an online insurance hackathon. The teching up of people, benefits, payroll is quite huge in the country. One of the largest players in the country, which is Sprout, is actually chaired by a member of FinTech. The committee is chaired by one of the leaders in the industry, Sprout Technologies. Also transport, and at the same time, of course, banking and lending, which will be discussed later by one of our board members, Mr. Edison Tsai. Now, later I'll leave it to both Joe and Mr. Mark Vernon to talk about the collaboration between the FCO UK Industry Sandbox. But we're also proud that last year it was the first time for the Philippines to be very prominently represented in the Singapore FinTech Festival. We shared the stage with Mr. Ravi Menon, and while we're still finding ways to open up the API platform, quite honestly, it's active in the region, but we're trying to get them to waive fees in times of COVID. We're working very closely with the regional players and the regulatory bodies in the MAS. We also championed the Startup Week last November with the DICT. So that was one of the core projects of FinTech Philippines. And up until, I think Edison was in February of this year, we were still tinkering with the idea of sending a delegation because we forged a partnership with the Beijing Internet Finance Industry Association. Things have been halted the past 2 months, quite admittedly. Beyond just doing talks and webinars, we're working very closely with the membership, with Jove specifically, to champion with Jove and Mark Vernon, and also with RV De Vera and George Royeca, who are all members of the board, to develop a product that we could roll out to MSMEs for free in the country. Next slide, please. So we're very proud to have some of the biggest names in technology in the country, and many of them are actually serving in our board. Next slide, please. Primarily, most of the work that we've done has been in the education and the creation of a bigger market in the Philippines. Some of the other members of our board served in the FinTech Alliance, such as Edison and also EDA. And of course, one of the leading voices in regulation and legislation, who you'll be hearing from in a bit, is Attorney Mark Rosetta, who's our corporate secretary. All of us in FinTech Philippines, led by our chairman, Mr. Tito Ortiz, would like to welcome and open the doors for more conversations and possibly projects with both the Manchester Chamber and also the British Chamber. Last slide, please. Sorry, the partnerships. So currently right now, yes, let's leave the international partnerships if that's all right. You could pan back to the slide prior. Opening up Philippine fintechs to the rest of the world is one of our key priorities. So aside from the partnership with both Taiwan and also Beijing, we have pending partnerships that are hoping to be activated with MENA and also with India and of course in Singapore. And hopefully this will be the beginning of a partnership between FinTech Philippines Association and also the British Chamber. So last slide. In behalf of our board, led by Dr. Tito Ortiz, we would like to thank you all for this opportunity, and we look forward to a collaboration this year. Back to you, Susanna and Chris. Thank you.
Thank you for that, Ms. Amor. So we're now going to introduce our next speaker, Mr. Jove Tapiador. So our next speaker is the president of Good Tech Holdings and is a past chairman of the FinTech Philippines Association. He has combined experience in the fields of e-payments, rural banking, microfinance, and community development. Over the years, his work allowed him to train and support more than 1,000 rural bankers and cooperative leaders with direct impact to over 190,000 low-income clients in the country. He has provided project consulting services for clients such as the Asian Development Bank, USAID, World Health Organization, Philippine Red Cross, and the Malampaya Foundation. He currently serves as a trustee of the FinTech Philippines Association. So now, over to you, Jove. Jove, you may start sharing your presentation. Hi, Sir Jove. I think you might be on mute.
Okay. All right. Can you hear me now?
Yes, great.
Okay. Thank you. All right. Thank you for giving me this opportunity. I'd like to share with you some quick facts. Don't you know that the Philippines is almost near the $1 trillion club? In terms of GDP, purchasing power parity, the Philippines is 29th as of 2018, and 2020 it's almost around $900 million in terms of GDP purchasing power parity. That puts the Philippines almost at the same range as the Netherlands, Malaysia, and even as higher than Vietnam or Singapore or Switzerland. So perhaps it's now time to see the Philippines in a different light, not just some developing country, but really an emerging economy that will be in the top 20 in the decade, top 20 in terms of purchasing power parity. So with that context, I'd like to share with you what are the digital financial services opportunity in the Philippines. So the Philippines has 20% of the ASEAN population, with estimated to be 115 million by 2025. And then we have around 15% of the ASEAN GDP in terms of nominal purchasing power. But surprisingly, despite that, 65% of the adult population is underbanked or unbanked. And there's a $2 billion SME funding gap. So for some, yeah, this seems to be an opportunity because it provides, there's a large market. It's a growing economy. Despite COVID, we expect a V-shaped turnaround according to government officials. And there's a huge need for financial services that only digital can provide because of its archipelagic nature of its geography. It's tough to have the kind of infrastructure that you would normally find, say, in Thailand, in China, or India. And if you can look at in terms of number of bank accounts, only around 34% of the Philippines are banked. The adult population, only a third of them have a bank account. More so that credit card ownership is only less than 2%, debit card ownership is around 21%, mobile money account is only less than 5%. So, sir, it's really a cash economy. But as what Amor has mentioned, we are living in a post-COVID, a new normal, as they say, that people are forced to go digital. And we are expecting that in a span of 2 to 3 months, there will be a lot of micro SMEs and even ordinary Filipinos jumping into digital financial services. What would normally take 2 to 3 years, as some people would say, has been compressed to only a few months. And in the Philippines, we are looking at 4 major archetypes of players in the FinTech space. You've got established financial players like banks, insurers, and then you've got pure play FinTechs. For example, you have Accudin and First Circle that are operating in the country. You also have established consumer players like the large retail stores, SM, Robinsons, convenience stores like 7-Eleven. And finally, you've got consumer technology platforms like a Grab or a Gojek or a Lazada, which is the largest e-commerce player in Southeast Asia. When you combine all of these, everybody is into some form of FinTech, one way or another, providing credit, providing loans, providing payment services, providing touch points for financial services. And what we're seeing here is that there's no, it's hard, it's tough to define the boundaries of where FinTech is. As what Amor said, FinTech is the underlying current where it supports various verticals. And in this case, even among players, they come from different types of industries: retail, banks, e-commerce. But what is clear in the Philippines is that there is a large underbanked, unbanked market. And according to Bain, Google, and Temasek, really the underbanked market in Southeast Asia is the opportunity where there is a convergence of customer needs and the digital financial services that provide access to this kind of market. So you've got now established financial players, consumer tech platforms, pure play FinTechs, and even established consumer players trying to offer access, value, and convenience to the underbanked. And mind you, take note, 65% of the adult population is underbanked or unbanked. Now, for comparison, there is significant unmet demand for non-housing consumer loans. This is just an example. Let's say we're looking at a segment of the fintech market in terms of credit. And what we're looking here is that the Philippines actually has the lowest consumer loans as a percentage of total household income across ASEAN region. So low that it's less than like around 10% only, compared even to Indonesia, Malaysia, Singapore, Thailand. So there's a big gap that can be filled. And like I said, a proper fintech solution, product, service can address that gap. Another example would be SME loans as percent to SME contribution to GDP. Indonesia, Philippines, Vietnam has only have around 20% of SME loans as percent of SME contribution to GDP. So small and mid-sized enterprise merchants are underserved as well. And the traditional players like banks are unable to fill that gap. And we find that there are fintechs already attacking this space. So players that successfully offer integrated solutions, for example, for SME merchants, that can provide better customer experience, that can solve multiple SME business pain points, and the ability to offer lending, they can have a head start. In fact, in that same study by Bain, Google, and Temasek, 95% of Filipino SMEs say that they will be willing to use a single payment provider for offline and online payment processing needs or other value-added services, which includes customer analytics, lending, inventory management, even campaign management. So even now, although this study was done in 2019, but even now, 2020, I have tech players working even during a lockdown period, working as hard or harder than before because there is this demand now. And in fact, they are reaping the benefits. One tech player I know accelerated their go-to-market strategy because they found a big demand, not just in Manila, but in the countryside as well. So I guess to close my piece, what I'm saying is that the Philippines is a big market. There is opportunity in the underbanked segment of the population, which is huge. SMEs are underserved as well. And there's already tremendous demand, pent-up demand for the type of technology goods and services, not just fintech, that they're looking for. Fintech typically is the starting point for them to go digital because there's a payment need. And when you do e-commerce, you'd require payments. So I guess for the Manchester Chamber of Commerce, for the British Chamber of Commerce, this may be an eye-opener for you, giving you a taste of what the Philippines is undergoing right now. And perhaps for those who have not yet been to the Philippines, this is not a rural country. In fact, it's a highly urbanized economy, as you can see here. I'm right at the middle of one of Manila's business districts, and it's quite dynamic. And for those, especially for the British citizens in our board, Mark Vernon and Peter Ng will be speaking shortly. They might share with you some of their experiences.
Thank you for that, Jove. That was a very helpful presentation, and I'm looking forward to hearing more about your work when we enter the Q&A portion. So before I start introductions for our next speaker, I would just like to remind that you may send in questions at the chat box below addressed to everyone. And so our next speaker is Mark Vernon. Mark Vernon is a serial entrepreneur. He is an angel investor in more than a dozen products and companies and was an investor judge in Series 3 of CNN Philippines show The Final Pitch. He is the owner of ventures such as Tag Cash, Tag Wild, Tag 77, Proof Core, iPlots, and VTC. He currently serves as the Vice Chairman and Treasurer of FinTech Philippines Association. Without further ado, let's welcome Mark to start this presentation.
Hi. Yeah, I've been here 8 years. It was my third retirement, but I couldn't retire. I just started another business, and 3 years ago, co-founded the association with Joe Tapidor. And it's worked quite well over the last almost 3 years now. We've had 160 members and adding more. So I just want to give you, there's just 3 slides, just an overview of the banking, the payment system and the major players. So I'll just share my screen. So yeah, we got 70% unbanked. The figures vary of the last 3 years, different. You might get different figures from different people. As of I think it was 2.5 years ago, the BSP put out 78% unbanked. But the reason why, in my opinion, many people's opinion, there's just not enough profit for the banks to chase people in provinces or lower income area. So that's up to the fintechs to try and get them banked in some way. And that's 70% unbanked. The ones that are banked, it's a mixture of formal banking and e-wallets and other methods. So as of last November, the central bank mandated a system for sending money from bank to bank. Before that, it was made a lot harder. So the 2 systems are PesoNet, which is any amount end of day settlement, and if it's sent before 3 o'clock, it gets settled that day. And InstPay, which is any amount up to 50K, but instant settlement. So this has made a big difference. Before this, there was mostly checks sent around, which is, for me, kind of old-fashioned. And PesoNet and InstPay are going to make a huge difference into moving money around without checks. Open banking might be realized in Europe, mandated by European Bank, but here open banking is not yet realized. But there are very few banks offer API services. One standout is Union Bank, so they're one of our members, and they offer a full suite of APIs. They're pretty good to work with. They're also okay. They've integrated blockchain a lot. They understand new methods of fintech, where a lot of banks are just catching up. So for remittances coming into the country, we've got $30 billion a year. Obviously, it's going to be cut down a bit this year. And $650 million come from the UK. So that's quite a lot of money. But 5% comes through as cash, as via cash agents, and not through the banking system. And that's probably because Filipinos often are earning cash outside the country. They don't trust banks, or they don't trust maybe the tax system might get taxed, or they think they might get taxed, or the money's going to be traced or whatever. So that's just that lack of trust. Most money has been coming over the last 10 years on Western Union, MoneyGram, but now we got some new players that are pretty good. And that's Zoom and TransferWise, and there's a few others like and so on. Domestic remittance costs inside the country, just for moving money around, is about 3% of whatever you send. Mostly it's about 6 big companies. The biggest are Sevan and Palawan Express. So someone troops along, they go along to a location and they give them cash over, their ID and stuff, and then it's sent to someone else who's waiting in another Cebuana location around the Philippines. For me, this is it's expensive, 3% just to move money around inside the country. I've got to mention about 1% of the total. It's hard to get accurate figures, but about 300 million comes into the country via Bitcoin. You've got companies like Bloom, SCI, CoinSgage. They are licensed. You need a license, a virtual currency license to convert crypto to fiat and vice versa. So the e-wallets and payment system in the Philippines. So as of a couple of years ago, 99% of all payments use cash. So with PesoNet and InstaPay being mandated, that's now risen quite a bit. And the increased usage of wallets, especially with COVID-19, that has increased quite rapidly, but we haven't got any accurate figures yet. The the EMI licenses, the electronic money issuer licenses, that allow e-money operators to run the wallets. There's, I think in the UK, there's like 150, 350,000 euros in paid up capital, and it takes maybe 6 months to do it. Over here, 16 granted in the last 15 years, and the requirements are quite a bit higher, 2 million paid up capital. And then the usual matching funds to operate. The biggest players are Gcash, which is backed by Globe, and Paymaya, backed by Smart. Both of
is actually to mention that none of these are actually brand new concepts, but rather these are concepts that when you actually pair it together with blockchain technology, they become very powerful. And so the first that we're going to look at is smart contracts. And by definition, this is a self-executing contract which allows buyers and sellers to directly interact using lines of code. So it's self-executing based on the contractual agreements in code, right? And what this allows is auditability, compliance, reduction in transaction volumes. But what blockchain enables is now you have this automated contract, which is tamper-proof, and it's based on this blockchain database. It also allows automated multi-party settlement, meaning that you can have multiple parties interact rather than having just singular people who only had access to the database previously. So to give you an example of what this looks like, AXA in the past has actually piloted something called AXA Fizzy. And so this was actually a automated smart contract platform for the flight insurance industry. And so what AXA actually allowed you to do was take out insurance policies for delayed flights. So say that your flight was delayed by 2 hours, and your insurance policy would actually pay you to compensate you for a 2-hour delay. So what happened is that AXA actually integrated their database with flight stats, which provided real-time information about flights around the world. And once you've taken your flight and then you've ended up being delayed, the smart contract itself can check the status of every single flight at any given point of time and self-execute and basically settle claims automatically. So this provided a very, very efficient way of doing settlements with very, very few people needed to intermediate. The second part is, so this is not just limited to IoT, but is also applicable for kind of all Industry 4.0 tools. So you can also include machine learning and AI. But in particular, in this case, IoT refers to a network of physical objects that gather all this electronic information. And IoT devices have been made very powerful in the insurance space by basically providing these trusted data sets through physical devices going through a trusted database and then enabling kind of smart contracts enabled automated claims and settlements. Right? To give you an example of this, we look at basically the case study with Maersk. So Maersk actually piloted and is still running something together with IBM called TradeLens. And this is basically a digital platform for the global supply chain. for freight forwarders. And so if you look at this, that TradeLens, it basically enabled importers, exporters, truckers, freight forwarders, port authorities, all to be connected on one single database, which is something that wasn't possible in the past, right? Everyone had their own database before. So now you've got this one single source of information, which is also verified. And you know that one thing that used to be a problem in the past is really accepting that no one had tampered with the information on that database, which is something that you no longer need to worry about. And then finally, the last thing I will talk about is something called consortia. And again, not a new concept, but something very powerful that blockchain has brought to light. And so consortia are basically the companies or organizations come together to participate in one common activity. And now for the insurance industry, this has become really interesting, basically for standardization of data, to have built-in governance structures, and to have shared solutions. And so the real benefit that we saw here in the InsurTech space is really these new data sets where previously you didn't have all competitors integrated into one database, but now you do. So now you can have a neutral party aggregating information, and then you also have information decisions being made based on this aggregated data. Now, the example of this from the InsurTech perspective is actually B3I Consortium, which is based in Switzerland. So this actually started with more than around 20 insurance companies that actually fund a private organization that aggregates all the information. Now, their sole purpose is actually to be able to create solutions for the InsurTech or the insurance industry as a whole, but to be actually a neutral party. So you can imagine now that with a consortium of multiple different parties that used to be competitors or still are competitors, you have a much larger data pool to be able to base your decision making from. And so these consortium have now become very interesting to be able to develop and commercialize new solutions. The last thing that's very interesting is also the standardization of these data sets. Okay, so without confusing you too much, I'm going to leave it there and then leave for any questions to be asked later. Thank you.
Great. Thank you so much, Peter, and apologies for the technical difficulties just then. So without further ado, I'm going to start introducing our next speaker, Mr. Mark Goriseta.
Oh, okay.
So Mark Goriseta is the managing partner and head of the corporate group of Goriseta, Africa, Cauton, and Saavedra. With over 16 years in private practice, Mark has developed an extensive expertise in complex corporate transactions, commercial contracts, and regulatory matters in a range of areas that impact businesses, whether for startups or for top 100 companies. He is a pioneering expert on the law on digital assets, blockchain, virtual currencies, e-commerce, data privacy, and artificial intelligence. He is legal counsel to the biggest and most impactful technology and online companies in the Philippines. Mark currently serves as the corporate secretary and chief legal of FinTech Philippines Association. Mark, you may begin your presentation.
Thank you. Can you see my slide?
Yes.
Okay, thanks. So thank you again, everyone, for inviting me here. I am Mark Goriseta. I am the managing partner and head of the corporate group of Goriseta, Africa, Cauton, and Saavedra. We have offices in Ortigas Center, in BGC, in the Visayas, and in Mindanao. I'm also as mentioned, I'm also the trustee and corporate secretary of FinTech PH. So for today, I will give a brief talk about the current landscape of emerging and disruptive technologies in the Philippines, what laws govern these new innovations, and what we need to watch out for. So we begin. So while I have probably 8 to 9 slides for my presentation this afternoon, considering the very limited time, this slide basically sums up everything. You need to take a picture. This is the only slide that you need to take a shot of. This is basically a snapshot of the regulatory framework generally governing fintechs in the Philippines. Or if in case, again, if you want to go into tech or fintech, these are the main regulatory agencies, the SEC and the BSP. Okay, so on your left, under the SEC, Securities and Exchange Commission, are activities, services, products regulated mainly by the SEC. In case you do not know, our Philippine SEC released last year, 2019, draft rules pertaining to digital asset exchanges, which is basically akin to an order book exchange wherein a person can buy, trade, or sell in the marketplace digital assets instead of the traditional stocks which are being traded in the Philippine Stock Exchange. Also, under that, during the if you remember, during the so-called ICO boom or craze way back in 2017, ICO means initial coin offerings. So it was there was a crazier boom way back in 2017 and 18. So the SEC, to address that, also released draft rules on initial coin offerings. This is basically a capital raising mechanism wherein you issue tokens or digital assets. So in short, this is the digital version of an initial public offering or an IPO for traditional shares. ICO rules are now referred to as digital asset offering or DSOs, or sometimes also called security token offerings. So prior to this pandemic, the SEC, so I guess like everyone who is like following the progress for this, everyone is asking when this will be finalized. As you can see in the slide, it's still in red. These are all still draft rules. So the SEC issued a statement before the pandemic that these draft rules will be released or finalized June of 2020. So we're already May 27. So I believe next week will be under the MGCQ or GCQ, while our SEC has been meaning the SEC and bank has been meeting regularly. I am not sure if this is still within their priority. So, but as of today, these are still pending. Other relevant rules here, if in case you don't know, the Philippine SEC has released the crowdfunding rules last July 2019. So it is already issued and can be used. If I'm not mistaken, there are 3 to 4 applicants vying to be the first to be issued a crowdfunding issuer platform in the Philippines. So basically, what is crowdfunding? Crowdfunding is an offering of securities, either debt or equity, through of limited scale, not more than 10 million pesos for retail investors and 50 million pesos for qualified institutional buyers through an online platform. Just before I forget, in the Philippines, just to entice you, most of these fintech activities, there are no except for the general rule on domestic market enterprise, wherein if you breach the 40% foreign ownership, then your capitalization should be $200,000. For most of these fintech products or services, there are no foreign ownership restrictions. I will discuss that further later. So also under the SEC, as you can see under the crowdfunding rules, the box on the SEC also regulates online lending and financing companies governed by the Lending Company Regulations Act and the Financing Company Act. I'll discuss that further later. On the right hand side of your screen are BSP, are services currently regulated by the Bangko Sentral ng Pilipinas, or our Philippine Central Bank. As you know, in case you don't know, our BSP has been an early believer of tech and has embraced tech to be able to achieve its objective towards financial inclusion, meaning, as mentioned by Job earlier, meaning making financial products and services to more Filipinos, especially than back. In the Philippines, the BSP regulates, I think similar to other countries, our BSP, our central bank, regulates virtual currency exchanges. I will discuss that later further. Electronic money issuers, or the e-monies, electronic money, electronic payments and financial services, operator of payment systems, conversion of traditional banks to digital banks, among others. So that's under the purview of the central bank. Also, as a fintech entity, on the last couple of rows, it is important to keep in mind that other relevant laws, such as the Data Privacy Act and all other issuance of the National Privacy Commission, we have the Cybercrime Prevention Act, the Anti-Money Laundering Act, under the Anti-Money Laundering Council. Also important to remember consumer protection laws, such as the Consumer Protections Act, securities regulation, consumer laws under the Securities Regulations Code, and the Central Bank's Manual on Banks or more. I did not include in my presentation today discussion governing other areas of fintech, such as insurtech, which is a good thing. Peter was able to discuss regtech. I also did not include here discussions regarding CESA, which is one of the zones which is pushing to be a tech hub, attracting offshore companies to come here to the Philippines, aside from other zones that are vying for the spot, such as Bataan's AFAB and Aurora's APECO. So now please allow me to share some examples of each fintech activity and its active players. So as you can see here, we discuss here first e-wallets or e-money. Of course, most of the logos that I showed here today are just my clients or friends, so to ensure that I won't be violating anything. So we first discuss here e-wallets or e-money. As they say in the Philippines or probably around the world, whoever holds the wallet of the consumers is king. So I guess more so now under the new normal. In a study, actually, which I heard, it was reported that there's an expected 205% increase of business activity for this segment in 2020 in the Philippines alone. So take note that this study was conducted prior to COVID-19. So just try to imagine what will be the figures post-COVID as everyone is gearing for a cashless society under the new normal. As of date, there are, as of date from 2009, believe it or not, the regulations pertaining to electronic money has been here since 2009. So BSP has been very active pursuing fintech. So as of today, there are actually 17 non-bank electronic money issuers authorized by the BSP. The latest one was just issued last week, which was issued to a media giant. So just try to figure out who that is. Basically, e-money is for everyone's consumption. Basically, e-money is money electronically stored in a platform that consumers can use to buy or pay for goods and services. So to transmit or remit funds or withdraw funds and the like. E-money instruments include cash cards, e-wallets accessible via your mobile phone or other devices, stored value cards, and other similar products. Key requirements to be an electronic money issuer in the Philippines is 100 million pesos capitalization paid up. There should also be among the 4 requirements or elements to be an electronic money issuer in the Philippines is the cash in and cash out component. So most of the applicants failed that, so their applications get rejected because they failed that test. So although there's a cash in, if there's no cash out, you don't need an electronic money issuer license. Probably you'll fall under an OPS or an EPFS. Also, one of the most difficult matters to hurdle for you to get this license is compliance with the central bank's fit and proper rule, compliance with the Anti-Money Laundering Act, among others. Note that not all banks in the Philippines are EMI licensees. Banks, if they want to hold and or issue e-money, must apply for this license separately from the BSP to offer e-wallet service. Next. Next up are virtual currency exchanges. I could see the CEO of Bloom in attendance here. Hi, Israel. Basically, the BSP, as early as 2017, has issued guidelines on the use of virtual currencies or digital assets such as Bitcoin or Ethereum. Probably you want to ask, can I register? Can I go into a virtual? Can I enter into virtual currency exchange business and facilitate the conversion of any other crypto? While it's not in the rules, the BSP and the SEC, I'll discuss that separately, is only comfortable in allowing what you call the safe coins. What are safe coins? Who knows? But basically, those are the top 5 tokens in the world. So usually I advise top 5, top 3, Bitcoin, Ethereum, and the like. So basically, a VCE facilitates a more reliable, as discussed earlier, cheaper and faster remittance service, both domestically and internationally. If an entity, as discussed, if an entity wants to facilitate the remittance or conversion of fiat money, peso, to virtual currency or crypto, they would need this license. It must first obtain this license from the BSP. As of today, if I'm not mistaken, there are 13 virtual currency exchange license holders in the Philippines. So the top players are flash on your screen. Next up, digital banking. So this is very interesting. So all banks now, especially now, are scrambling to go fully digital. Note that there is no such thing as a purely purely a digital bank. You cannot just enter the Philippines and go to the BSP and say that you want to be a digital bank. That's it. No. A bank first must have a traditional banking license. So you must be any of the 4 traditional banks allowed in the Philippines, either a universal bank, a commercial bank, a thrift bank, or a rural bank. So if you're any of the 4, once you get approval of the BSP to be a bank in the Philippines, then the bank can, as a bank, you can now apply with the BSP for a certificate of authority to offer electronic payment and financial services. So, well, there's no doubt that on this field, Union Bank is leading the way, and followed by other players here. Also, if I'm not mistaken, I just included the logo of East West Bank here. They just announced, actually last week, the launch of their digital banking service under their Kumo platform. So what is important here is for the bank to prove that their tech would be liable to comply with the AMLA, anti-money laundering mechanisms, KYC procedures, know your client procedures, and all annexes of under the MORB. Next, wow. Next would be probably rightfully I could discuss are online lending platforms. With the proliferation of unregistered online lending platforms and in the active crackdown of the SEC of these scams, of certain online lending scams, it is important to be aware of the regulations governing online lending and financing companies if you intend to set up one in the Philippines. Basically, it's flash on your screen, Lending Company Regulations Act, Truth in Lending Act, a lot of SEC memorandum circulars, and again, the Anti-Money Laundering Act and the Counter-Terrorist Financing Laws. Take note that as a general rule, there's no foreign ownership restriction for online lending or financing companies in the Philippines, but for lending companies, the minimum paid up requirement is 1 million pesos only. For financing companies, the minimum paid up is 10 million pesos. So probably people always ask me, what's the difference between a lending company and a financing company? And an online lending and an online financing. Basically, a lending company grants loans from its own capital or funds or from funds sourced from not more than 19 persons, while a financing company is much bigger. It allows you to extend credit facilities, and you are not limited to source your funds from your own capital and could be funded by more than 19 persons. That's basically it. And my last slide, sharing with you some of the latest government initiatives to help promote startups, MSMEs, techs, and fintechs in the Philippines. First, the Philippine Innovation Act, which based on your left, the Philippine Innovation Act, which basically requires the National Innovation Council to develop a comprehensive support program for MSME innovation, which of course includes tech and fintech, and to set up an innovation fund. This is, I think they copied this model in Singapore. Then there's also on your lower right, there's also the Innovative Startup Act, which provides supposedly funding, tax incentives, startup visas, wow, among others, to startups or startup enablers who have either an innovative product or process or an innovative business model. So if you want more details of that, please email me. I could answer. And also, this is quite interesting. On the upper right, not a lot of people know this. There's this, I think last year, 2 years ago, they passed last year, I think, they passed the Personal Property Security Act. What is this? This act basically allows the use of personal property, including intellectual property, IP, over your tech. So if you registered your patent, your trademark, probably not really, your patent over your tech or your innovation or your idea, you can use it as a collateral. So, so the bank would now supposedly accept this under this act, and to protect the bank, the collateral or your personal property requires registration with the electronic registry to be set up by the Land Registration Authority. To be honest, I'm not sure if this electronic registry has been set up already. So lastly, to further promote startups, including fintechs in the Philippines, for all of our friends here and overseas, we have the Ease of Doing Business Act. Basically, it aims to cut the red tape and the bureaucracy. It aims to limit the approval process to 20, less than 30 days. Again, the keyword is aim. So I believe that this is still a work in progress. So we're hopeful that this will be fully implemented post-COVID. Also, while not in my slides, other interesting pending bills, which you may not know. There's a pending Senate bill, which is the Digital Asset Act of 2019, which basically would would recognize digital assets as a kind of asset. Not sure if it's a different asset class in our economy. Also, the latest one, you may want to take note, is House Bill 6765. It's very new. I saw it last week from our tax team. It's the Digital Economy Taxation Act of 2020. What is this? It intends to tax network orchestrators. So this includes platforms or online intermediaries which are yet subject to tax by our current tax code. So basically, I think this aims to tax non-resident entities, or meaning entities not registered to do business here in the Philippines, but because of the borderless, because this is online, everything is, I guess, borderless, difficult to track. So this is what this House bill aims to tax. So again, probably to close, as BSP Governor Ben Jokno said last week in his talk, fintechs or techs can be and can provide the needed solutions. He also added that as we approach this new normal, there's really no arguing that the new economy is really digital. Thank you, everyone. Have a pleasant afternoon.
Thank you, Attorney Mark. I think that was a very informative presentation, and it answered a lot of the questions that most of our registrants actually sent in prior to our event. So we had a lot of questions regarding market restrictions and liberalizing measures, and I think that summed up a few of them. So thank you for that. So now we would like to move on to the question and answer portion of our program. And we would like to start with the question, what are the current post-COVID and future opportunities in the Philippines that British fintech organizations can plan for and collaborate with local strategic partners to help with the digital transformation? I think maybe we can start with an answer from our British panelists, Mark, Vernon, and Peter.
Mark, you want to start?
Yeah, I had my mic off. So yeah, I think one of the biggest opportunities is in lending. Let's see, the informal lending, when people lend to each other, sometimes it can go up like 10 or 20% per month. And then sometimes they've got some companies doing short-term lending for $200 or $300, and they're charging 1% a day. So there's no laws on loan sharking here. So I think, my particular business has a lending component on peer-to-peer lending, and that's set around 3% per month. So as a way of making money, anyone who's into lending or credit, anything to do with credit, organizing, that kind of thing, then there's a lot of opportunities over here. In anything else, anything with technology that you don't see being applied over here, then just query, just ask us if anyone's actually doing it, or if there's a need for it, or whether it's too expensive. I see a lot of companies from abroad coming over here and thinking they can provide services, but they're just too expensive, especially if you're offering to the retail market. So for me, the biggest and probably the biggest need after COVID is lending to especially to small businesses, and there's an awful lot of small businesses over here. And to the retail side it's a little harder, but certainly lending to small businesses, I think that's the biggest growth area. Over to you, Peter.
Yeah, I definitely agree with Mark on the lending front and the lack of credit infrastructure here. The other opportunity, and I know that one of our colleagues here from Bloom is here, and these guys actually offer remittance services. So I think that's also another huge opportunity here, where you have over $50 billion worth of remittances coming into the Philippines every year from overseas workers. I think this is probably one of the most crucial times where people locally actually need to be supported, where they actually need especially last mile services. So the distribution of actual financial aid is going to be really key. And that's something that actually we've seen in the last couple of weeks. We've seen more initiatives from the e-wallet players partnering with kind of like local government institutions. Like, I'll give you one example, like there's a Makati Citizen Club card. So it's like an identity card where the local city of Makati actually use these identity cards to be able to distribute financial aid to the people locally within this city. And I know that they partnered with one of the local e-wallets here, who basically will facilitate the distribution of that aid. I think that's going to be quite key, especially now that the government announced a certain amount of financial aid per family.
Right. Thank you for that, Mark and Peter. We actually also had a few questions about security, but before we move on with that, perhaps Susanna from Greater Manchester has a few questions from her membership and network. Susanna?
Sorry, I was on mute.
No worries.
No, I was just I think this was for our first speaker, but I believe she's not here because she was talking about how most of the population is still a bit not trusting on the e-wallet payment and all that kind of stuff. And I was wondering, because it's more driven by cash. So what do you think? How is that going to be? How the speakers see it, that people are slowly moving into using more and more e-wallet. I know COVID has had an impact on this, a positive impact, but obviously it's one large population. And how do you think that penetration going for people using more of that kind of payment going forward?
Yeah, I can answer that.
Sure.
So there was a study done by USAID back in 2017 on exactly that kind of low trust environment in electronic payments. And that's the reason why only less than 3% in terms of number of transactions are in electronic. But the interesting thing is that there's also a generational and also a generational thing, because many millennials now prefer to use electronic forms of payment, and they're already a large part of the workforce. Second was that even before the pandemic, the central bank updated that same study, and it has jumped to 10% already from 3% back in 2017. The number of transactions in electronic form is now 10%. So what we're seeing here is an increase of more than 3 times in just 3 years. And so what we're seeing is a trend towards digitalization in electronic payments. So the low trust environment is a result of previous experience on the earlier iterations of e-money, where transactions were not settled immediately. But with the introduction of interoperability in the banking system, with PesoNet, with InstaPay, there's that almost instantaneous move of fund transfer. And people's expectations are therefore more than satisfied. So that low trust environment may soon shift in the coming years. Because of that, and with the current situation where there's no choice but to go digital and electronic, the trust factor will increase tremendously as well in the coming years. So I think we're on track to hit more than 20% of transactions to be electronic by 2021, 2022.
If I can add to that, the trust factor, especially outside of the cities, comes down to what your friends and what your family is using. So if your friends use it, you have more of a trusting, rather than trusting a company you can't really see. If your friend's already doing it, then you're likely to say, well, I'm going to use it as well. This happened in China quite a bit because everyone had smartphones, everyone was online. So it just happened very, very quickly. So that'll happen here. It's going to speed up and you'll see the momentum going.
Thank you.
If I may add something as well. So last week, actually, the governor of the BSP, Mr. Benjamin Diokno, actually announced that he has a digital payments transformation roadmap for up until 2023. So actually, the BSP targets that 50% of total retail transaction volume should be digital by 2023, so 3 years from now. And the second strategic objective is actually to have 70% of Filipino adults to be financially included. And so I think that's going to be a huge push towards getting people digital and financially included.
Thank you. The other thing will be how robust would you say is the cybersecurity type of things in Philippines? Because obviously the country is growing at a massive pace from what you just said, and this obviously requires the right infrastructure to kind of keep up with such rapid growth.
Yeah, I can add something about that. So the Department of Information Communications Technology, which is the government agency in charge of the IT infrastructure in the Philippines, as well as the policy side, they are actually strengthening their cybersecurity infrastructure because they realize that the Philippines is moving forward in digitalization. Having said that, there are a number of industries that are also proactive, especially in the financial services sector, where there is a very active cybersecurity operations security professional association, and I think that they are very much aware of the cybersecurity standards that need to be in place, especially in the financial sector. But for companies specializing in cybersecurity, then it becomes an opportunity as well. Then, you know, any UK cybersecurity firm might have, if they can bring the right know-how at the right price to the right audience, then it is an opportunity, because there's no way but to secure all the digital infrastructure, which admittedly is not foolproof.
Thank you.
If I could add, this is not a legal question, I guess, but I could answer it. Yeah, I think since we handle a lot of compliance matters as well for a lot of fintech companies, I always advise that these fintech companies must ensure that their IT infrastructure, their fraud risk management systems, and their internal security policies are intact and can withstand any cyber attack. Also, aside from the internal mechanisms, these companies must also really educate their customers and make them aware on the very basics on how to protect their devices and data. So like a lot of online fraud, especially this during this, despite this circumstance, a lot of people are still taking advantage. So a lot of fraud happening on the consumer level, phishing, emails containing a malware, fake social media accounts, etc. So everyone, both the internal and also the fintech company, should make or educate the customers or the consumers on how to protect themselves. Thanks.
Thank you.
Thank you all. Unfortunately, we have run out of time for more questions. Perhaps if you would like to learn more about the FinTech Philippines Association or FinTech activities in the Philippines, you can reach out to our speakers, as they provided the details, or also to the FinTech Philippines Association. So as we end, I would just like to thank everyone from the UK and also in the Philippines for tuning in to our program today. Thank you especially to the Greater Manchester Chamber of Commerce, as well as the FinTech Philippines Association, for joining us this afternoon. We hope that you found this very informative and helpful, and we will be in touch soon to share with you more of our programs in the future. Thank you.
Thank you.
Thank you very much.
Thank you, everyone. Bye.
Thank you. Thank you. Bye.
Bye.